that must be considered, or key factors to be considered, in determining the transaction price. The transaction price. Now, first of all, here, when talk about the transaction price, this refers now to the amount of money, or basically that particular consideration which is supposed to be paid by a customer once the goods have been delivered to such a customer, or once the services have been provided to such what a customer. Now, which are some of the factors which are supposed to be considered in the terms of determining this transaction price which is now to be paid? So we have a number of factors which are supposed to be considered, and one of it is what we refer as the performance obligation, obligation to be satisfied. Performance obligation to be satisfied. So in this case, when talk about the performance obligation to be satisfied, we are talking of the goods which are to be delivered to a customer, or services which are to be provided to such what a customer. That is the first thing the company should be able to consider in terms of determining the transaction price which is supposed to be paid by such who a customer. Now, the other factor which also need to be considered is what we refer as the variable consideration. Variable consideration. In this case, when talk about the variable consideration, this is a consideration, or basically is that particular price which is not fixed. So basically what that means is that this particular price is dependent on a number of things which are likely to happen in the future. So in other terms, we can say that this particular consideration is what is contingent, and therefore in this case, the company, what will the company need to do here is to estimate this particular variable consideration, because you are saying that this particular consideration will depend with a number of what factors. So therefore, the company, in determining the transaction price to be charged, it basically need to estimate that particular word variable consideration. Number two, or the other factor which also need to be considered here, is what we refer as the non-cash consideration. Consideration. Now, what is a non-cash consideration? This is basically that particular consideration which is to be paid in other means other than cash. Other than what? Cash. For example, the customer may promise to pay a consideration which is in form of other asset other than what? Cash. So what the company should be able to do is to estimate the value of this particular consideration, of which IFRS 15 requires that the company should be able to estimate the value of such consideration using the fair value of the non-consideration to be given by who? By the customer. To be given by who? By the customer. And finally, number four is what we refer as the consideration payable by the customer. Consideration payable by the customer. So this is the other factor which will need to be considered. So before the company can be able to arrive at the final figure of the transaction price, the company should be able to determine how much is that consideration the customer will pay after the goods are delivered, or basically after the services have been provided. So therefore, what the examiner here was requiring is you highlight at least two factors, which now will need to be considered by the company in terms of arriving at that transaction price. And basically for each, you get 2 marks.